A UK bank has just decided to stop its customers from buying or selling crypto. And so in this video, we're going to look at why this bank is no longer supporting bank transfers or card transactions related to crypto assets. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys, available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Hi everybody, and welcome back again to another episode of Enter Crypto with me, Chris Kenyon. Now in today's video, we're going to be talking about the bank Kroo. It's quite a small bank. They've actually decided quite recently to ban its customers from performing crypto transactions. Now for anybody that watches this channel, you will know that last week we did a video on this already. And now why I'm making a further video today is actually because I had a huge amount of comments on this asking for, what are the further implications of this and the long-term implications, because this is a small bank, so why would this be any sort of big news when it's only a small amount of people that's actually affected? And so in this video, we're going to look at the short-term impacts. This is going to cover inconvenience, liquidity, increased transaction costs, market volatility, and barriers to entry. The long-term impacts that we're going to cover will be the shifts to alternative financial services, increased regulatory scrutiny, reduced mainstream adoption, and its impact on crypto startups and businesses. And so, as always, guys, for anyone who hasn't actually seen my previous video last week or doesn't know about this particular story, we'll just quickly read through the first couple of paragraphs of this article, see what it's about, see what we can learn, and then we'll comment and analyse it after. So, UK-based challenger bank Kroo has decided to prevent its customers from performing crypto transactions. The bank cited the increasing use of crypto by fraudsters to scam individuals as the reason behind its decision. Kroo is joining other challenger banks such as Starling Bank and Chase UK in implementing crypto transaction bans. Starling Bank no longer supports crypto transactions, and Chase UK, which is part of JP Morgan, blocked UK customers from purchasing crypto assets last year, according to tech.eu. In its updated term T's and C's, Kroo specified that starting from the 30th of May 2024, it will no longer support bank transfers or card transactions associated with cryptocurrencies. The bank will decline payments to crypto asset providers and will not process bank transfers from senders related to crypto assets. This move follows a broader trend among banks to address the rise in online fraud. Specifically, Lloyds reported a 23% increase in crypto scams in 2023. This is compared to the previous year. Additionally, the FCA has cautioned against the risks of investing in crypto and the potential for scams. Now, while I've got your attention, and before we jump into the analysis of this news article, I just want to introduce you to one of the channel's partner exchanges. Many viewers based in the UK always ask me, where is the best place to buy crypto? And the answer, in a word, is BingX. BingX is the all-in-one trading platform that's got you covered, offering not just crypto, but also stocks, forex, commodities, and even indices. Plus, they are also the official sponsor of Chelsea Football Club, so you know that they are legit. Now, with BingX, you'll get a user-friendly experience and you'll get robust security features, and they are also KYC friendly, ensuring a safe and transparent environment for all your trading needs. And here's the best part. BingX is actually giving away up to $7,200 in new user bonuses exclusively for followers of this channel. All you have to do is sign up using the special link in the description. Plus, the first 50 new users from our community get a $100 free bonus. There's no deposit required or volume. And so this is a limited time offer. Don't miss out. And so here we have a bank telling its customers what they can and cannot buy. Despite the thing that they are, want to buy, in this case crypto, being completely legal. You are allowed to buy it, but the bank is saying, we're not allowing you to do it. So you've put your money in the bank, you've been to work, you've paid your tax, your money's there, you want to buy some crypto or anything else, and the bank says, no, you're not doing that, we're not going to let you do it. Now, what many people don't actually know or realise is that once you deposit your money into the bank becomes the legal custodian of that money. So it's actually, for all intents and purposes, legally not yours anymore. Not many people actually know that, and so they think that when they've put money in the bank, it's actually still theirs, and it's not. Legally, it's not yours anymore. So then every time after that you go to the ATM or you try to draw some money out, you're really asking permission every time, because they can limit your withdrawals, which they do. They can tell you what you can and can't buy, like they're doing with this whole crypto thing right now. And to me, this sets a dangerous precedence for other banks to do it as well. And this is not even really, I would say, a precedence, because like the article says, we've already got Chase, and they're a big bank. You know, Kroo's a small bank, but Chase UK are a big bank backed by an even bigger American bank. And so let's just have a quick look at what the short-term impacts are here, and then we'll cover the long-term impacts. So in the short term, this is going to be for Kroo customers that want to buy crypto. It's going to be very inconvenient. It's going to be disruptive, especially if they've got customers that want to buy or have been buying, say dollar cost averaging every week or every month when they get the payday, and they've decided, and maybe that's their only bank. You know, not everybody has multiple bank accounts, and so they're going to have to now start looking at, well, do I just stop buying crypto, or do I actually open up another bank account so that I can actually continue conducting my transactions? So people that DCA, that are Kroo customers, are now going to have to find alternative methods, because the bank has said that we're not going to let you buy these things. It also creates liquidity issues for crypto users that want to get from crypto back into the fiat currency, through bank transactions or through the bank, getting money back into the bank. So if you need immediate cash access, that liquidity is not there now for you if you're a customer. Another thing it might bring is increased transaction costs. You may have to, what you might have been cheap to you before, that's now gone if you're a Kroo customer. So you might have to now find less favourable financial services, possibly with higher fees or less competitive exchange rates, to continue buying crypto if you want to continue with that behaviour. And maybe not in this particular case with Kroo, but certainly with Chase UK. And if other banks decide to follow suit here, we're going to have new investors finding it more and more difficult, and other banking customers, it's going to be harder and harder to enter the crypto market, because we're going to have more barriers to entry. Traditional banking channels are going to be blocked, and this could, in the UK at least, potentially limit market growth. Now, some of the long-term impacts. This is going to, in my opinion, just highlight how important decentralized exchanges are, and DeFi in general, because I think over the long term, people are going to be saying, this is not how I want to be treated. I don't want a bank telling me what I can and cannot buy. Even if you understand that legally the money is theirs, legally of course, as I mentioned earlier, you might say, well, that might be the case. Legally, it might be theirs, and I put the money into their bank, and it's legally not mine anymore. But I don't like that. I don't want to be. I want to own the money. If it's mine, it's mine. I shouldn't need to ask permission for something that I've already worked for and that I'm entitled to. And that's the problem here. And that's why crypto is so important, because it's permissionless. You don't need permission to send a transaction from one person to another. And so these types of this type of behavior by banks, traditional banks, it is kind of an advertisement for DeFi and other sort of non-traditional banking services. And this, over the long term, can actually alter the landscape of traditional, TradFi and the old legacy financial services. and increase, although the banks and the government wouldn't like this, it can actually increase the use of unregulated platforms. So it actually harms them in the long term, I think. It also gives banks a voice. They're basically saying that they're doing this because of scams, no other reason. Now, I don't believe that, but that's what they're saying. I believe they feel threatened, and that's why they're anti-crypto, and that's why they don't want people buying it. But, they're saying at the moment, their narrative that they're trying to push is that there's too many scams. And so if they can shout loud enough about this, it may increase regulatory scrutiny later on, stricter regulations. So that's not good. And long term, this can also have an impact on crypto startups and crypto businesses that want to get their foot in, want to start doing business, because they're going to have challenges with funding issues. If they've got bank accounts with these banks. And they're going to struggle basically to maintain any sort of banking relationship if they're involved in cryptocurrencies. One good thing in all this is that it actually, and this might not sound like a good thing on the face of it, but it erodes trust in banks. People get to see who they are. They kind of reveal the hand. What we get to see that they actually don't like crypto. They don't want it to be around. It's a pain for them. It's a threat, it's competition, and that's what they don't like. They don't want competition. It's just like the governments don't. The government does not want competition. The banks don't want competition. They're very, very happy in the position that they are now, where they decide and they control everything. They tell you what you're going to buy with your money. That's a wonderful position for them. It's a horrible position for us, obviously, but that's where we found ourselves today. And these decisions by these banks is proof of that. And so that's what I've got for you today, guys. As always, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.